In this Patreon requested video, we're going to compare some of the top business development companies and determine which one is the most appealing investment. We're going to compare 5 different BDCs which were picked based on size and popularity of each investment. The 5 we'll be looking at are Ares Capital, ticker ARCC, Main Street Capital, ticker MAIN, Hercules Capital, ticker HTGC, Capital Southwest, ticker CSWC, and Blue Owl Capital Corporation, ticker OBDC. We'll compare these BDCs on a lot of important factors that matter for these types of companies, including yield, portfolios, growth, and total return. So with that being said, let's get started. The first thing we're going to do is look at some surface level data, and we'll dig deeper as time goes on in this video. We'll start off by looking at each BDC's current yield. Which investment would currently offer you the most in dividends as of today? These are the current yields that these investments are offering, with all this information coming from Seeking Alpha. Coming in first, we have Ares Capital with a yield of 9.56%, followed by Hercules Capital at 9.47%, Capital Southwest at 9.45%, Blue Owl at 9.43%, and Main Street at 6.58%. Current yields change on a daily basis, and there's a lot more to take into account for each company, including dividend growth and total return. Plus, nearly all of them are offering the same yield, so there's not much difference between each investment. But in this category, Ares Capital is going to get the win. Next up, we'll take a look at the total portfolio size of each company. When it comes to portfolio size, there's a couple reasons why this is an important metric. It's usually a good sign that the company is more diversified, and thus no single investment makes up too large of their total portfolio overall. It also usually shows that the company is good at picking investments, thus growing their portfolio over time. But this is usually only true for internally managed BDCs. Externally managed BDCs are owned by an asset manager and can rely on their connection to the asset manager for additional capital. 3 out of the 5 companies we're looking at are internally managed, which are Main Street Capital, Hercules Capital, and Capital Southwest. The other 2 are externally managed BDCs. These are the rankings for the largest portfolios as of December of 2023. Ares Capital is in first place with a size of $22.9 billion, followed by Blue Owl at a distant second with $12.9 billion. Main Street Capital comes in at just $6.8 billion, followed by Hercules Capital at $3.3 billion and Capital Southwest at $1.4 billion. So you can see there's a pretty significant difference between first place and last place. It's probably already well known by my viewers, but Ares Capital is currently the largest publicly traded BDC in the world, and Capital Southwest is ranked 31st according to the Sovereign Wealth Fund Institute. So in this category, Ares Capital again is going to come out on top. The best portfolio grower among internally managed BDCs though is going to be Main Street Capital. We'll now look at how diversified each investment portfolio is, judging by how many sectors they're invested in and what percentage makes up their top 3 largest sectors. Just like portfolio size, a well-diversified portfolio helps reduce risk. The more broadly diversified a portfolio is, the less likely their portfolio overall will suffer if just one sector in particular goes through some difficult economic conditions. The least diversified BDC is Hercules Capital, but it needs to be understood that this company almost exclusively invests in tech and health startups. Most BDCs invest in a wide range of industries, including insurance companies, food companies, and transportation, but a handful do target specific sectors, including Hercules Capital, so it's not really fair to compare HTGC with all the others on this list in terms of diversification. But Ares Capital is actually the worst in terms of being a broadly invested BDC, with their top 3 sectors making up a whopping 44.3% of their overall portfolio. Next is Capital Southwest at 37%, and then Blue Owl at 29%. The best diversified portfolio among all these companies is currently Main Street Capital, who are really well diversified across a lot of different sectors. Their 3 largest sectors only make up 20% of their investments, so in this category, the winner is going to have to be Main Street Capital. Next, we'll look at current non-accruals, which is the percentage of their investments that currently aren't earning the BDC income. An investment goes into non-accrual status when the company the BDC lends money to is doing so poorly that they're unable to pay interest or even principal on their loan. These loans are significantly much more likely to default, which can lead to losses for the business development company. Obviously, the lower percentage the better, and again, this is another good reason to have a large portfolio that's well diversified. As of third quarter 2023, the average non-accrual percentage across all BDCs was 2.2% according to Fitch Ratings. So pulling this information from each company's latest 10Q, in first place we have Main Street Capital with just 1% of their investments being on non-accrual, far below industry average. Up next is Blue Owl at just 1.1%, followed by Ares Capital at 1.2%. These are really great numbers from all these companies, especially Main Street considering they're a much smaller BDC. In fourth place is Capital Southwest with 2% being on non-accrual, and then Hercules Capital being at 2.7%. So most of these companies have lower than average non-accrual ratings, with only Hercules Capital being above average. Given the nature of their investments, which again are tech and health startups, this actually isn't a bad number in my opinion. HTGC can be considered a slightly riskier BDC, but they're doing better than some of their peers in this tech startup-focused sector. So for this category, the win again is going to have to go to Main Street Capital. We'll now go back to focusing on their dividend distributions. Looking at each company's dividend track record, the good news is that none of these BDCs have gone through a dividend cut in the last decade. Some have seen their special dividends change if they have issued any, but none have cut their regular quarterly or monthly distributions. Blue Owl has only been around since 2019, so we only have a limited number of data available for them so far. Next, we'll look at their 5-year dividend growth rates. This information is being pulled from each company's website, and because Blue Owl hasn't been around long enough yet, I'm showing the percentage that they've gone through since their second dividend distribution, not including the special dividends. Looking at their 5-year dividend growth rates, Capital Southwest has blown every other company out of the water with a 5-year growth rate of 58.3%. To my knowledge, this company has been the best when it comes to growing their dividend distributions across all publicly listed BDCs. In second place is Hercules Capital with a still very impressive growth rate of over 29%. In third place is Ares Capital, followed by Main Street Capital, and then Blue Owl with their limited track record. The reason I didn't include special dividends for this was because all of these companies have been paying more of these special dividends while interest rates remain high. This is due to so many of them holding a lot of these floating rate loans in their portfolios. When rates start getting cut, then BDCs will likely stop paying so many of these additional dividends, so in my opinion, growing their normal distributions was the most important metric to look at for long-term performance. So in this category, Capital Southwest is going to get the point. Finally, the last category we'll look at is their 5-year total return. For this ranking, we'll take a look at the total return of a $10,000 investment made into each stock 5 years ago from today, assuming that you chose to reinvest all of the dividends back into buying more shares of the exact same stock. Your returns would be lower if you decided not to reinvest, like let's say if you were currently living off the dividends for income. I also need to mention that this is all past performance and it does not guarantee future performance. So let's take a look and see how each company did over the last 5 years, ranking them by their highest average annual return. In last place we have Blue Owl Capital Corporation, but I have to mention two things here. First, again, the company hasn't been around for 5 years yet, only about 4.5 years so far, so this really isn't a fair comparison for them. Second, this company launched right before the pandemic, so that obviously played a big role in their ability to grow during their early years. But so far they provided an average annual return of 10.04% over this time, which considering they're in last place on this list, an average annual return of over 10% is still really good in my opinion. That's better than what the S&P 500 typically delivers in an average year. So still some really good results from this company in last place. In fourth, we have Main Street Capital with an average return of 13% per year over the last 5 years, which is really good. They paid a really high amount of special dividends over the last couple years thanks to high interest rates. Also remember, this is the lowest yielding BDC in this video, so this is still done really well in terms of growth. In third place, we have Ares Capital with an impressive average annual return of 15.88%. You can see at this point, any investment made into the top 3 stocks on this list would have more than doubled your money in 5 years, which is beating the S&P 500 at this point. In second place, we have Capital Southwest, which is slightly beating out Ares with an average annual return of 16.09%. For this one, my concern is that their stock has seen a massive rally over this last year with a 36.76% gain in share price. So while it has been really great, I'm not really optimistic that this incredible growth is going to continue much longer. Still though, it's had a really good rally over the last 5 years. Then finally in first place we have Hercules Capital with an average annual return of 21.07%, far beating the S&P 500. Just like Capital Southwest, they've not only paid a lot of special dividends over the last couple years, but they've also had a really good rally in the last year. I don't currently consider HTGC to be selling at a discount any longer, but at this point it's been the top performing BDC among the top 5 stocks we've looked at. So with all things considered, which company is the top business development company? We're currently looking at a two-way tie between Ares Capital and Main Street Capital, but all 5 stocks in my opinion have done really well and I think are worthy of consideration for a high-yielding portfolio. What I think it boils down to is what you're personally looking for. Based upon our comparison, Ares Capital has been the leader in terms of stable income. Main Street is more diversified, has offered more special dividends, and best of all, it pays monthly dividends. Blue Owl I think has a lot of potential despite being a new company, and they've done well in growing their dividends in a short amount of time. Both Hercules Capital and Capital Southwest pursue higher growth opportunities, and therefore I'd consider them to be riskier options. Still though, they've been well-managed companies and have undeniably done well despite pursuing riskier investments. So in my opinion, Ares Capital is the best for consistency, Main Street is the best for monthly income and for internally managed BDCs, and Hercules Capital has been the best for growth opportunities. But with that being said, that's going to conclude today's video. If you're interested, feel free to check out my Patreon where you'll find an Excel sheet of all of my holdings updated monthly. Plus it'll give you access to our Discord channel where we discuss higher yielding types of investments. With that being said, thank you all so much for watching today's video. If you liked what you saw, then feel free to hit that like button below and click subscribe if you want to see higher yielding investing strategy content. Again, thank you all so much for watching today's video, and until next time, take care.